All right, here we go. Going to talk a little bit about direction you might want to go for financing. There are a lot of options for you out there, and we're going to keep it simple. And we're going to talk about two loan types, conventional and FHA. A lot of people get confused with the differences between the conventional and FHA loans, and we're just going to kind of cover a few of the highlights on each one of them. So when you're ready to take that step forward, you're going to know exactly which direction you might want to go. So let's go ahead and start off with the FHA financing. A lot of people get confused with FHA financing. I think it's only for first-time home buyers, and actually, it's not. It's for anybody that fits within the criteria of the credit score and debt-to-income ratios. Now, the great thing about FHA financing is it allows for a broader range for credit scores and debt-to-income ratios, which does not make a direct connect to the interest rate so much like what conventional does. So you can see sometimes is rates into the high fives or in the low 600 ranges. Do you qualify for FHA financing? There's a little bit of a rate adjustments for those lower credit scores, but it doesn't allow to be able to get into a home. Now, another part that people love about FHA financing is you only have to put down 3.5% of the purchase price. So that's without being a first-time home buyer. Fantastic options. So low down payment, rates that are definitely in a better range than what for criteria than conventional financing. Where people kind of shy away from FHA is there is a higher mortgage insurance premium that is put on FHA financing. But to be truthful, which I always am, is that's why the interest rates are so much less than what you might see in conventional, because that they offset that cost. So don't get too concerned about what the mortgage insurance premium is for a conventional for FHA financing, because actually you're getting a lower rate. So if you were going to go conventional, you would just have the higher rate, and the difference would be in that cost itself. So you're either going to pay it in interest or you're going to pay it in insurance. So a lot of times we'll let people, definitely show comparisons on both sides, let you decide what you want to do. Because a lot of times the FHA does make more sense because you have a lower down payment and a little bit easier qualifications because the debt to income ratios are a lot more laxed, and also the credit score. So everything fits somebody a little bit differently. Now, there are no issues with getting them approved. There are some different appraisal reviews that have to be done. Basically, there can't be any active leaks in a home. If you're looking at a manufactured home, it can't be in a flood zone. So there's a couple things like that within FHA financing, but nothing that terrible. And it definitely would do a lot of FHA financing. It is the right fit for buyers out there. Definitely want to look at that. Now, if you have a stronger credit score and your debt to income ratios are less, that you can qualify for the best rate, then conventional financing might be your choice. Now, here's the good news about conventional financing. If you are a first-time home buyer, meaning that you have not bought a home, owned a home in the last 3 years, it only takes one person. If there's multiple buyers on the property, only one borrower has to be a first-time home buyer. You can get as low as 3% down on conventional financing. Now, of course, the less money you put down, the higher your payment. It depends on the property you're looking at. With conventional financing, when you have the stronger, higher credit scores and you have lower debt to income ratios, you are going to get more favorable interest rates. Now, anything less than a 20% down payment, you're still going to have private mortgage insurance on the conventional financing. That will not be as expensive as the mortgage insurance premium that is on FHA, but there still is a cost. Now, one of the biggest differences with the conventional financing is the appraisal guidelines are not as strict. Now, again, they weren't that strict with FHA, but there's a few things that conventional financing will allow that FHA won't. Of course, you don't want to buy a house with an active roof leak. So you want to keep moving that forward. Also, conventional financing, the mortgage insurance, once you have above 20% of equity, usually a lot of times it's right at 21% or so, but there's a gray area there. The mortgage insurance will come off if you just let the time frames run out, take their pathway, then it'll automatically come off. If your home appreciates in value faster than what the amortization tables show, meaning that you put a little bit more towards principal from time to time, we have a stronger market that increases value in your neighborhood, your area, then that you can request to have it reviewed. And if there's shown that more than 20% equity in your home, they'll actually remove the mortgage insurance. FHA, you have to refinance to be able to get the mortgage insurance removed, and you would have to refinance outside of an FHA loan. Now, there's more to that, and we can get into more details. I'd be happy to schedule a one-on-one strategy call and find out what's the best fit for you. So please like and subscribe, get more information. There's a link below to go ahead and schedule your one-on-one call with me, and we can review your outlook and put a great strategy plan to see exactly what type of loan is going to be best for you, where your home budget is, and then that way you can target the homes that you will fit in your budget, and you'll live in a peaceful way and not a financial stress way, because that is the most important. Now remember, home ownership builds financial and generational wealth, so don't pay the landlord anymore. Focus on getting your home and moving forward into your financial wealth. Everybody take care. This is Ron, the Home Loan Dude, and thank you for watching. Bye-bye.